Hey everyone, welcome back to the channel. Today we're going to talk about a place that rarely make headlines. And that's exactly why it's dangerous to ignore. No, it's not some obscure island nation. I'm talking about Taiwan.
Taiwan.
The single most underappreciated economic and geopolitical powerhouse on the planet. If you think Taiwan is just about TSMC and China tensions, buckle up, because the real story is way deeper, way stronger, and a lot more bullish than the headlines make it think. So here's the deal. While the walls has been glued to Xi Jinping's latest speech or Biden's tax sanctions, Taiwan has been quietly doing its thing, growing faster than Japan and Korea, outperforming China without the drama, and building what might be the smartest, most resilient economy in Asia. Taiwan doesn't flex, it doesn't throw tantrums, it just quietly wins. It's like that friend who doesn't post on Instagram but shows up in a Porsche with no debt and 6 businesses. Taiwan is that friend. Let's get something straight. Taiwan is not Greater China. In fact, I would argue it's greater than China. Yeah, I said it. The old Greater China idea that lumped together Taiwan, Hong Kong, and the mainland for business convenience, it's that today Taiwan is decoupling from China faster than the US or Europe ever could. Taiwan needs investment into China falling fast. Chinese money into Taiwan basically non-existent. Trade diversifying like crazy. More deals with the US, Europe, ASEAN. And here's the kicker. Taiwanese companies aren't just chasing profits. They are chasing political alignment. In a post-COVID, post-Ukraine world, everyone knows political risk is baked into every business model. Taiwan gets that. Beijing, not so much. Now let's talk money. The Taiwan Stock Exchange has been quietly crushing the Shanghai Composite, the Hang Seng Index, even the Nikkei. And yet, it still trades at a significant discount. Why? Because global investors treat Taiwan like a geopolitical landmine instead of what it actually is, a resilient, innovation-driven democracy with solid fundamentals. And look, even if you strip out TSMC, Taiwan is still packed with gems. Automation firms helping Japan modernize its factories, EV suppliers that Tesla actually relies on, IC design houses that don't make headlines but rake in profits. Renewable energy firms building offshore wind like it's a national sport. Meanwhile, in China, capital controls, regulatory whack-a-mole. Surprise, you're now a state-owned enterprise vibes. Taiwan is capitalism that works. China is capitalism with asterisks, footnotes, and parental controls. Here's the most frustrating part. Western strategists always say Taiwan's economy is solid, but it's just too risky. What they're really saying is we haven't done our homework. Look, military tension has existed since 1949. This isn't new. Markets have priced in the drama. What they haven't priced in is Taiwan's resilience. It's investing in asymmetric defense, drones, cyber, coastal missiles. The US and Japan are clearly treating Taiwan like a partner, not just on paper. Public opinion, crystal clear. Most Taiwanese see themselves as Taiwanese, not Chinese. And let's be real. If war breaks out, it's not Taiwan that loses everything. Beijing faces catastrophic fallout, economically, politically, globally. So ask yourself, is it really Taiwan that's unstable? Or is it China? You know what really makes a market investable? Institutions. And Taiwan are criminally underrated. Here we're talking about a central bank that's done better with inflation than most of the OECD countries. A fiscal policy that's boring in a good way. A legal system that actually protects IP and enforce contracts. Transparent governance, free press, competitive elections. Compare that to China, where data gets massaged. Courts take their cues from party officials. Investing in Taiwan is like driving on a freshly paved road. Investing in China is like navigating a mountain pass during a landslide, blindfolded. Everyone knows Taiwan makes great chips, but here's what they miss. Taiwan isn't just dependent on semiconductors. It controls the supply chain. That's power, real power. TSMC isn't leaving Taiwan. It's expanding to Arizona, Japan, Germany, not to exit, but to anchor Taiwan's global importance. No major economy can industrialize without access to Taiwanese tech. The US and EU are friendshoring hard, and Taiwan is the friend everyone wants at their party. In the 20th century, oil defined power. In the 21st, it's silicon, and Taiwan refines it, packages it, and delivers it. One last thing, Taiwan has vibes, not loud, chest-thumping nationalism, but quiet confidence. Think Japan in the 80s. Pop culture on the rise, food, fashion, and design scenes booming. Digital governance that's admired globally. A youth culture that's optimistic, not cynical. Compare that to China's soft power crash or America's internal Twitter fights. Taiwan feels like one of the last places that still believes in the future and is actually building toward it. So here's the takeaway. Global markets misprice Taiwan. They focus on the perceived risk and totally misses the actual strengths. Taiwan isn't just a semiconductor story. It's a resilience story, a governance story, a long-term growth story, hiding in plain sight. If you believe in rule of law, technological excellence, open societies, institutional strengths, then you should be bullish on the future of Taiwan. And if you think China's rise is starting to creak under its own contradictions, it's time to stop treating Taiwan like a tail risk and start treating it like the center of gravity.